I'd like to introduce Karl Maier. He is a CFO, a seasoned business advisor, and the founder of Abunden, a company that facilitates peer advisory retreats, roundtables, and coaching for owner-operated industrial businesses. He has over 3 decades of experience helping private companies build value and guiding them through acquisitions, restructurings, and growth. He is known for identifying potential cash flow, efficiencies, and profit drivers that make businesses run. One of his outstanding achievements was when he served as CFO for a health, safety, and environmental services company and a distributor of industrial pipe, valve, and fitting to the energy industries. He led a team responsible for calculating collateralized mortgage bond, or CMOs, payments exceeding $1 billion per month. He conducted cost studies that yielded over $4 million in profit improvements within a year for a major national bank's department. Enhancing profitability and building on existing systems, that's Karl's business. Welcome, Karl.
Thank you. Excited to be here. Looking forward to our conversation.
So tell me, let's go from the beginning. Tell me your early aha moments that put you on the path to seek efficiency and profits.
That's a good question. Man, how far does that go back? So some of my just kind of earliest moments were when I was at college trying to decide on a major. And at first I thought, oh, history sounds good. But I really, after I took 1 or 2 history courses, was like, well, this is just kind of reviewing the past. I want to think about how we would kind of change it more and how do we change things. And so I got into the economics courses and really liked the idea of kind of how do we optimize, how do we make things better? And obviously the economy is a complicated thing to do that with, but that was one of my moments when I was like, yeah, I'd like to kind of twist the dials and see how we can make things work better.
So what did you first go into? What was your first adventure?
Well, after I did economics undergrad and kind of got my MBA, worked for a mortgage banking consulting group in one of the big consulting firms, and eventually that led to me getting hired away by a client, and that's where I did all the mortgage banking, mortgage-backed bonds, mortgage-backed securities, CMOs, or I guess what some people call them these days. And that was really interesting because I actually worked in the back office on like the first ever mortgage-backed security, and they were very new at the time. So, it was drinking from a fire hose, trying to figure out what they were doing with all these things and how to make all these calculations. And there's new computers that we got to try and keep up. So that was pretty crazy. Yeah.
So you also do fractional CFO, correct?
Yeah, these days. So I got pulled into the CFO world, and so the last 7.5 years, I've been on my own doing fractional CFO, helping companies, analyze, do they have good numbers? How do we analyze the numbers? How do we improve your profits? How do we help you grow faster and not run out of cash in the process?
Well, I think cash is going to become even more king depending on what happens to our economy here is coming soon. My question to you is, what are 3 common problems you see that companies often do and can be easily avoided?
Well, one of the first things that come to mind is just not thinking about cash, a week or 2 or 3 out into the future. If you just say, hey, this is what is in my bank account today, and I'm not out of cash. Well, that's good. That's a start. But you kind of thinking out just a few weeks ahead can really, it doesn't take that much effort, and it can save a world of headaches. I mean, if you can tell one of your key vendors, hey, in 2 weeks, I've got a big invoice coming due. Can I push that back a week? And they're almost always going to say, sure, thanks for giving us a heads up. But, that's so much better than, not paying them and then them calling you and going, hey, dude, what's up? you know, this last week and you didn't. And, oh, yeah, you know, so that's probably the number one thing for what to do to improve, you know, keep an eye on your cash and an easy thing to keep track of. Another thing that comes to mind is, you know, when you're growing, you know, most companies, they got to pay your people. You're probably going to have to pay your vendors before your customer actually pays you. You know, you've got inventory to, you know, maybe in your business. And so every sale actually takes more cash. And so, yeah, it's profitable, but, you know, great. I got the sale. Now we got to do the work and we got to ship the product and we get an invoice and then 30, 60 days later we collect. So you get this long gap between when you start putting cash out and when you get cash in. And so the faster you grow, the more you run out of cash. That's basically what it is. And so that's you know, another thing that it's, you know, when you kind of spell it out, it's like, oh yeah, that's pretty clear. But until you kind of stop and think about it, it's like, oh yeah, that, you know, I'm so excited about making the sale and, you know, knowing that I'm going to make money off that sale. Kind of, it's easy to forget that you're using a lot of cash in that process. So that's, and that's a real opportunity for bankers to be able to lend you money to keep
extend the credit. Yeah.
Yeah. So, but, you know, but being able to explain to the banker that, yes, you are really going to be able to pay them back. And here's the plan for doing that, is part of the challenge too. So yeah, hopefully those are a couple helpful tips for people.
Was there a third one?
Third one is if things get tight, kind of hit the limit on your borrowing and you're like, oh man, it's really tight. The natural instinct for most entrepreneurs is I need to sell more. That's how I solve this problem, is I need to sell more. And if you kind of go back to the tip number 2, you know, is that it takes a while from when you sell something to when you actually get cash in most situations. There's, you know, to collect the money up front, that's awesome. Then, you know, that's good job. Mm-hmm. But most people think if I get in a tight cash squeeze, my answer is to sell my way out of it. And actually, the tip is shrinking down and focusing on your most profitable customers that are going to give you the cash quickest is actually kind of the answer to getting out of that cash jam. And then you can, you know, if you shrink back, get your cash under control, collect some of those invoices that are outstanding, so you got a little bit of cash, then you can start to grow back. So that's tip number 3.
Let me go back to number 1. So I think you brought up an interesting point about you know, when you get to the point you can't pay the bill, it's managing cash flow. And a lot of times people don't realize that all it really takes is talking to your supplier, vendor, whatever, and setting expectations. Because, and also now that then sets up trust and a long-term relationship. Because if you don't communicate, you don't pay, then you're likely going to burn that relationship over time.
Absolutely. Yeah. The communication is the key. Like you say, relationship, build the relationship, build the trust. People can be amazingly flexible, you know, if you're upfront with them.
Yeah, more than anything, as long as you get assurances from you, and obviously you do it as well, right? That's assurances, but you have to do it as well. But, you know, if you start managing the expectations, they're going to be willing to work with you even more.
Definitely. Yeah, because they want you to be a customer, you know, and as long as you know, communicate clearly and then keep your word, you know, and as best as you can. And, you know, that communication pays off. Definitely does.
Sure. On the second point, you talk about growth, and that can lead to all kinds of problems. Have you found in general, what's a healthy growth rate that is sustainable? Obviously, you can expedite that with bank loans and things like that, but that's a different ballgame as well.
Well, it's one of the things that people really don't realize is you can actually calculate your maximum rate of growth that you can grow without taking in external capital, you know, bank loan or investor, or put in money, personal money into the business. And so, you know, it depends on factors like how long it takes you to collect, how much money you're putting out up front. And so there's kind of a natural limit to your growth rate for most companies. And, you know, it varies, you know, the specifics vary, but I've helped a number of companies be able to grow at 25%, 30% a year for several years in a row, and some much faster than that. But if you, you know, if you want, you know, there's people that are like, hey, I've got a really nice situation. I'm paying, you know, got a nice house, take nice vacations, got a nice car. So it's all good. Growing at 10% is fantastic. It's not too much stress. Other people are in a situation where they're like, hey, I really want to grow this company. I want to double it in 2 years, 3 years, and, you know, keep growing it after that. You know, and those are the companies that, you know, I really particularly enjoy working with, that can, you know, to help them understand all the different pieces they need to move their company ahead at that pace without getting into trouble.
Mm-hmm. So based on your knowledge and experience, let's talk about, in your crystal ball, what are some factors you're looking at and where do you think we're headed in the next 6 months to a year?
Well, I think the number one thing coming from the broad economic perspective is right now we've got a fair bit of uncertainty in, you know, for people to make business investments, long-term business investments. And it's, you know, I think things will eventually settle down, but right now the tariff situation, it's just a little uncertain for a lot of industries. Where if we're bringing parts into the United States, if we can finish products, you know, how's that going to work? Am I going to have to pay tariff? Am I not going to have to pay tariff? And so I think that uncertainty has really slowed a lot of investment down. And, you know, day to day, people are still buying stuff. So it's not like the economy's collapsed. It's not, you know, the end of the world or anything like that. But I do think that's that uncertainty is just a factor we're having to deal with right now. And for, you know, construction type companies that are dependent on, you know, a company making an investment to grow, you know, to build something, I think that's a factor.
I agree with you. I think we're in an environment of chaos, uncertainty, and one more factor, escalation. If you look at things around the world, things are escalating. They're not de-escalating.
Oh, yeah. We've got, you know, the past, you know, 25, 30 years, you know, there's been very few wars and, you know, relatively small conflicts. And, you know, now, yeah, we're seeing a number of things pop up, you know, with the crazy stuff in Eastern Europe, Middle East, and, you know, who knows what's going to
It's like hotspots all over.
Right. Yeah. Africa's got stuff going on. And so, you know, we got warships are surrounding Venezuela. So, you know, yeah, a lot of chaos going on.
So in this environment, what do you tell business owners? How should they manage their finances and what should they plan for? And I mean, are there any tips you can give them now in this, you know, chaotic, uncertain, escalating environment?
Well, you know, it's kind of a good news, bad news type thing. Yeah. The bad news is there's chaos, there's uncertainty, you've got all these conflicts going on. But for business owners, you know, being nimble, being quick is an advantage. You know, if you're a Fortune 500 company, it's hard to kind of turn the battleship quickly, so to speak. And so for the business owners, look for those little opportunities and, you know, be opportunistic. Probably not the time to say, hey, I'm going to, you know, push all my chips in the middle and bet on a long-term, you know, bet right now, you know, again, for most businesses, but, you know, find those opportunities. There's a shortage here because people don't know what's going to happen on, with the tariff, or if there's this conflict's going to drive something. So, change, be creative and be opportunistic would be my advice for sure.
And for investors that might be looking, we're talking about business, but also investors, I think you might be able to speak to this. Some of them are looking for, where do you think are the opportunities in this environment? Because any environment, whether it's disruptive or not, there's always some positive and negative. So what sectors or what areas do you think really interest you, and why, as business opportunities for growth and investment?
There's a lot of craziness in the markets. I think right now AI stocks are so high. I have to wonder if, there might not be, AI is a fantastic tool set, and I think it's going to do amazing things. But just like we had that kind of .com went up, and then we had a little crash before it gone. I have to wonder if there might be a little reset in AI at some point. Good luck predicting when that is. But there's a lot of other technologies that are really impressive right now. You've got optical computing and quantum computing. You've got so much going on with the genetics space. So I think there's, as an investor, I'd, be looking at some of these areas that are moving very quickly. They may not be getting quite the attention that AI is. Even, what's going to happen with self-driving cars, could have a huge impact on our economy. Good luck, timing all that. But if you've got some of your funds that you can be patient with, there may be some good opportunities in some of those spaces.
So how should a business owner manage their cash flow right now?
Close attention to cash flow is really important. I'm working with a couple of businesses that things have gotten a little bit tight recently. You've got your cost kind of maybe a little bit unpredictable. In some sectors, there's inflation. Others, if you look at the CPI, the Consumer Price Index, a big chunk, something like 40% of it is housing, and housing costs have been going down right now. And so, that is pulling down the overall index of inflation. But there's some other areas, food and labor, that it's not clear to me that those are going down. So, you've got to really watch what's happening in your cost, your labor cost, your sales cost, and how does that affect your pricing to your customer? You may need to tweak your pricing, especially if you've got a number of different products and customers, and maybe that you've got some that are doing really well, and you've got a few that are dragging you down. And if you're not really digging into the details, you'll miss that.
And speaking of cash flow, in terms of globally, do you think things are headed for a real cash crunch, and cash is going to be more of a king than ever? Because like many things are leveraged, from countries to companies to even people.
Yeah.
And to me, it seems like we're headed for a cash crunch.
Now, one surprise could really make things really tight. So, China is such a big part of the economy these days, and who knows, we predict potentially a lot of different directions it might go. But yeah, you're right. If someplace like China, who knows, but they locked up for a little while, and that could present all sorts of both problems and opportunities. So if you've got a little cash available to take advantage of those opportunities, if not predicting it, and certainly don't want it, but if there's a war with Taiwan, or some energy disruption that stops everything from coming out of China for a while, who knows? But yeah, having a little cash to take advantage of those opportunities is certainly a possibility. And what would that do to the all these different countries and companies that are highly leveraged? Good question. Good question. That's certainly an area of potential concern.
So, what do you also think about the dollar? It's gone down 11% this year, right?
Yeah.
And where do you think that's headed and why?
Well, right now, kind of in the short term, we've got the tariff uncertainty that's happening, and I think that's been a significant part of the recent fall in the dollar. Long term, I'm still very bullish on the United States and our competitive advantages. So I understand the dollar's falling right now. Maybe it falls a little more. Hard to predict that, short-term movements in currencies, but over, the next 5 years, I would expect the dollar to rebound. Personally, it's, the U.S. has got, so many natural resources, strong demographics, technology, it's defensible. So, I'm bullish on the dollar over the several year period.
And what advice do you give for people in terms of what kind of opportunities to be looking for, either investment or business wise, in this challenging environment that we're coming into?
To me, we're really in a situation where you're seeing some fundamental changes. The way that, kind of the international trade agreement that's been going on pretty much since right after World War II is fundamentally changing in my perspective. So, it's going to take some time to bring a lot of the manufacturing back in the U.S. We've got to build up, mining raw materials, processing raw materials, turning that into kind of intermediate products like steel and aluminum and copper. We've got to bring all that back, and that's going to take a lot of time, a lot of investment. So that's a lot of opportunity right there. And then, there's a lot of other situations like, because of fracking, natural gas is extremely inexpensive in the United States compared to the rest of the world. And you can use natural gas to do a lot of things industrially, including plastics. And so, businesses that use plastic in the United States can be very competitive. So I see that as a huge opportunity for a lot of people, whether, it's just a plastic item or plastic, sourcing plastically for your, other products. So there's a ton of opportunities, but it's about being nimble, understanding everything's changing. So you've got to work harder to, keep an eye on everything in your business. It's not like, it's the same as last year and the year before. No, it's not.
No, and I think it's going to be quite different, and the margins are getting tighter and tighter. So a lot of companies ultimately end up competing on price. And what do you tell those companies that are doing that?
That's the easy way, is compete on price. You don't have to think real hard. And, hey, if you're trading natural gas or something, yeah, good luck, finding another way. But for most businesses, that are doing a service or a more complex product or product that you can differentiate just a little bit, if you spend some extra time understanding your customer, just like you were saying earlier, if you have a relationship with your vendors, be amazed what you can get done. If you've got a relationship with customers, you're really getting in there and understanding what they're trying to do and help them understand how you can help them. That demands a premium. That sets you apart from your competition. So I think, that's more work. You may concentrate on slightly fewer customers and go a little deeper to differentiate it yourself, but then you can really boost your margins when you do that as well.
Yeah, I think that's there's lots of different ways to be creative, but the key is differentiate, because I think these days consumers are no longer buying products, they're buying experiences.
Absolutely. Yes.
And there's lots of areas there to differentiate.
Absolutely. And, and that's going to the consumer, but even in the business, they're buying solutions, not products, or generally not. It's amazing how often you can turn a commodity, service, or product into a value-added product or service. If you're willing to ask a few questions, listen to your customer, you can go a long way.
What do you think about the role of AI now?
At one level, I think it's pretty cool, pretty amazing. At another, for me personally, it's like, well, great. I've got to, somebody say, to ask questions to, if I'm wondering, how how much is it going to cost to fly there somewhere this weekend for, do something fun. Man, AI does a great job of doing that little research for me, but I'm not sure that really changed my business. Now, there are other niches like in the, medical, the genetics and gene folding, some of this research where AI can do just phenomenal stuff. So, but I think for most businesses, it's going to take a lot of time, a lot of work to change people's habits, people's behaviors, build processes. It's going to take years to build this into most businesses where it really has an impact. Not that it won't, not that it's not amazing stuff, but it just takes time to build it into, I'm working with a $30 million contract manufacturer right now. And, I can see that someday at some point that can be helpful, but the investment to make those changes it doesn't happen overnight.
Right. So what are like three basic things most owners should know about finances and CFO type skills? I mean, they don't need to become a CFO or an expert, but part of it is, I think, the things we're talking about, keeping up with the environment, trends, economy, but they don't have to become an economist, right? So what are things that you think, if they kept abreast of and knowledgeable about, as well as enhancing their knowledge base, that would really help them to talk to someone like you, let's say either a full-time CFO or a fractional CFO, right? We'll talk about that in a minute. But what would you recommend that this should be a kind of a core base for most business owners to have, so that when you help them, whatever, it can be even more impact?
Well, at the basics, you want to have some good financials. That's fantastic. That should be something you just have. That should be a baseline. The next thing on top of that, to me, that's really important is projecting your cash flow. So accounting looks backwards. I want your cash flow projection. That should look forward a number of weeks at minimum. So that would be the first thing I'd really tell for, unless you're sitting on millions of dollars and cash is just not your worry. That was number one thing. And the next is, because the world is moving so fast, having some sort of dashboard type thing that tells you, hey, what are the trends in the business? Then, where are my big customers? Where, and every company should have a slightly different, dashboard, but looking, things that are going to alert you to problems before they get too deep, and hopefully also alert you to opportunities. So that'd be the second thing that I do. And then, if I was a business owner looking for a CFO, the types of things I mentioned are definitely good and important. But what I really want is somebody who's going to come in and take a kind of little different view and go find opportunities, not just say, hey, I checked the box and I did these things for you, this month, just like I did last month and the month before. So, if you want different results, you need to ask different questions.
Try something different.
It's worth a shot. Give it a shot.
It's funny. I know what you're saying. It sounds so basic, but a lot of times people, end up, for whatever reason, let me just keep plugging away, don't give up. But, if you keep getting the same outcome, try something different.
Try something different. Yeah. Pick up the phone, shoot a message to somebody and say, hey, what do you think? See what you get. See what you get.
So speaking of these, what are one or two really key aha moments you've had related to the things we just talked about?
Well, one of the things is looking at your kind of customers and your products and where you're making your money. I had a chemical blending company, and so they had two major markets. And I said, hey, Philip, it's been a while since we looked at these numbers. Maybe we should look at it. I know there's been a lot going on in your world. And it's like, okay, yeah, that's a good idea. Why don't we do that? I serve this kind of oil patch market and this construction market. And I'll tell you what you're going to find. I make the money in the oil field, and the
Right.
construction just kind of, it covers some overhead. So that's fine. But that's what you're going to find. So I go and I pull some numbers, put my spreadsheets together, come back and, week or 10 days later and say, well, you were right. You're right. You're making all your money in the one space and not the other, but it's backwards from what you thought. Really? Yeah. You're basically breaking even. Once you allocate all your costs and overheads and stuff, the oil and gas is breaking even. And that's where, you should be making money because that's the riskiest but you're actually doing pretty well. But once you kind of put the cost with all the products, and it's like, wow, okay, so what do we do? And it's like, well, we need to have some conversations with those oil and gas customers. And he did, and he was able to move the needle. A number of them, were like, yeah, we were wondering when you're going to come to us and, raise prices because, we're seeing this in the market. So, so we were able to really move the needle and help us profits and cash flow.
Where do you see your future aha moments for you?
The things I run across, I mean, I talk to people they get new technologies and, new opportunities. They see a niche, worked with a guy that solved a problem for a country manager at Exxon. And next thing you know, that the VP that, or country manager got a promotion, and he was so, grateful that the company had helped him with this one problem.
Mm-hmm.
But there were worldwide opportunities for this company, and we grew that company 7x in 4 years. So it's just, you listen to people's problems, see how you can help fix somebody's problems, and you never know what'll happen next. So I'd say that's where I'm looking for the ahas.
And if you could have lunch or a meal or drinks with anyone, who would it be and why?
Well,
what would you want to find out? What would you want to find out?
I'd probably be with one of the like partners at one of these big venture capital firms and just hear what's going on with some of the cool technologies and, kind of hopefully get an insight into, what the world's going to look like a few years down the line when some of these cool technologies move forward. So that'd be fun.
Which examples of cool technology are you referring to?
It could be, things I'm hearing about these days, or like I mentioned earlier, optical computing, quantum computing, and gene technology to solve all these different problems, what's going on with like self-driving cars and so I'm sure there's probably stuff out there that's a little further out that I haven't heard about. And, maybe it's not public yet. It's still, we're early in the venture stage, and it'd be fun to hear about those and kind of about, what opportunities that presents for, some of the, lower middle market businesses that are trying to grow and how they might be part of that.
Well, I want to thank you very much for being on the show. I appreciate it. And you give us a little bit of your crystal ball. So let's see where things are headed. But at the end of the day, there's always cycles, right? And we're just going to go through a cycle that's going to be probably pretty rough. But at the end of the day, it's going to come back and maybe even stronger afterwards. You just got to get through the cycle, right?
I'm optimistic, U.S. long term, and hey, we have some bumps in the road. Let's figure out how to get through them and keep moving.
Sounds good. Well, thanks a lot, Karl, for joining, and thank you very much.
Thank you. Have a great day.
Getting to AHA was brought to you by iResearch. To find out more about us, head to iResearch.com and make sure to search for Getting to AHA in Apple Podcasts, Spotify, and anywhere else podcasts are found. And don't forget to click follow to ensure you don't miss any future episodes. Thank you for listening.